Based on the interest shown in our recent analysis videos, I've received several requests for specific tasks. Today, I've picked one, a Wyckoff analysis case study for Baidu stock. We are decoding Baidu stock using the professional Wyckoff framework. Here is exactly what we're covering: the 20-year trap, why this stock has done nothing for 15 years, and how that is finally changing. Smart money footprints. I'll show you the exact volume signals from 20 to 22 that prove big players are accumulating. The jump across the creek. We'll analyze the recent breakout and why the current last point of support is the most critical entry signal, and finally the $290 target. Stick around until the end, where I'll use the law of cause and effect to calculate our specific price target for 20 to 26. If you're looking to dive deeper into the technicals, I've mapped several educational videos in the YouTube card above. My analysis is based on the Wyckoff Method, a structured technical framework established by Richard Wyckoff in the early 1900s. Unlike lagging indicators like moving averages or the RSI, Wyckoff focuses on leading indicators, daily price action, and volume. The methodology relies on three core laws. Number one, the law of supply and demand. This is the engine of the market. When demand exceeds supply, prices rise. When supply exceeds demand, prices fall. Number two, the law of cause and effect. Market trends don't happen by accident. We look for a cause, usually a period of range bound consolidation, which builds the momentum for the next effect or the subsequent trend. Number three, the law of effort versus result. We look for harmony between volume, the effort, and price movement, the result. When we see a divergence here, like high volume with no price progress, it often signals an imminent trend reversal. Let's jump into the Baidu chart. Looking at its history over the last 20 years, we follow leading indicators, price, and volume as our primary tools. First, we will analyze what has happened with Baidu stock since the year 2000. Then look closely at the last 5 years to understand our current market phase. This will help us define our short term and long term strategies. We are applying Wyckoff principles, which rely on three major laws: one, supply and demand; two, cause and effect; and three, effort versus result. We will also perform a structural analysis to identify where the trend stops in range bound action. We look for footprints where the trend halts, the period where the cause is built, the subsequent test, and finally, the emergence of a new trend, either an uptrend or, in the case of distribution, a downtrend. Looking at the 20-year weekly chart from 2000 to the present, the stock appears directionless at first glance. Since 2011, it has moved mostly sideways. If you invested around 2011 or 2012, your price appreciation has been minimal for nearly 15 years, rarely moving beyond $280. It did reach $354 in 2021, which you can see highlighted in the blue circle, supported by high volume. Focusing on the last 5 years, the price action clearly shows we are in a sideways phase. After the March 2020 recovery, a buying climax occurred in March and April of 2021, touching $354. Distribution followed as the stock began falling. High volume at the bottom indicated the stock was moving from strong hands to weak hands. This downtrend aggravated with high price and high volume bars until March and April of 2022, where we saw the footprint of smart money. A preliminary support formed with volume between 40 and 60 million. This was the first entry of big investors, stopping the downtrend and moving price into a sideways range. For the last 3 years, the price has fluctuated between $75 and $160. This is accumulation. Supply is being absorbed by strong hands. you can see the price bars becoming thinner near the 79 to $80 range. Volatility has disappeared as supply is exhausted. Before a new trend emerges, strong hands must perform a test. This happened at the low of $74.71 around April and May. Volume during this test was less than 20 million, indicating that supply was fully absorbed. The test was successful and a new trend has emerged. This move is supported by harmony between price and volume. Over 4 weeks, the price moved rapidly from $90 to $132, while volume pushed from 20 million to 60 million. The stock then jumped across the creek, breaking resistance with high volume in September 2025. Currently, the stock is testing the last point of support or LPS at $110. Having completed this test, it is making higher highs. The path of least resistance is now upward as demand exceeds supply. The stock first needs to exit the range by breaking the 156 to $160 resistance line. After that breakout and a potential backtest, we expect the price to push toward our target based on the cost built since late 2022. The projected price target is $275 to $290. We expect this target to be reached in the coming weeks and months of 2026. This area aligns with the long term resistance seen on the 20-year chart. While we must watch the reaction at $280, it is clear that a new trend has emerged. If you're new to the channel and want to master the markets with a professional edge, if you're ready to trade or invest like a pro, subscribe and hit the bell so you never miss an update. I'd love to hear your thoughts. Drop a comment below with your feedback or a stock ticker you want me to break down. Subscribing and liking helps us reach more traders who need this Wyckoff perspective. Let's help the trading community grow. Please stop the video and make sure to read the disclaimer and disclosure. Thank you for watching. I wish you all a very happy new year 2026. Happy investing.